Prediction markets. You've seen the headlines. Polymarket did $44 billion in volume last year. Some people call them the future of forecasting. Others call them gambling with extra steps. But most people don't actually understand what they are, how they work, or why they're suddenly everywhere. So let's fix that. By the end of this video, you'll know exactly what prediction markets are, how they're different from sports betting, and why they might be the most underrated financial tool out there. So what actually is a prediction market? At its core, it's simple. It's a platform where people buy and sell shares tied to the outcome of a future event. You're not buying a stock, you're not buying a currency, you're taking a position on a specific question. Will Bitcoin be above $70,000 by the end of the month? Will the Fed cut rates in September? Will a particular candidate win an election? Every market has two sides, yes and no. And the price of a yes share represents the market's collective estimate of how likely that event is. Right now, this market is trading at 62%. That means the people who are trading on this platform, thousands of them, putting real money on the line, believe there's a 62% chance this event happens. And here's the thing, this price changes in real time. The second a major news story breaks, a tweet goes viral, an economic report drops, the price moves. Just like a stock. But instead of trading a company, you're trading probability. Now, why is that useful? Because crowds are actually really good at predicting things when you put money behind it. This isn't some theoretical idea. In 1988, 3 economists from the University of Iowa, Forsyth, Nelson, Newman, and Wright ran an experiment. They wanted to see if a betting market could predict election outcomes better than polls. It worked. The Iowa electronic markets beat the polls consistently. And that basically birthed the entire industry. So where do all these events come from? Pretty much everywhere. Let me show you what a typical platform looks like. Politics, US elections, European elections, primary races, referendums. You can even find markets on specific policy outcomes. Will the SEC approve a spot Solana ETF by Q3? That kind of stuff. Crypto, Bitcoin price levels, ETF approvals, regulatory decisions, having dates. Anything that moves markets has a prediction market attached to it. Macroeconomics, Fed decisions, unemployment numbers, inflation reports, GDP growth. These are super popular because they're tied to actual financial markets. If you trade stocks or crypto, these are the events that move your portfolio. Corporate IPOs, acquisitions, earnings surprises. There are even markets on who's going to be the next CEO of major companies. And then there's the weird stuff. Weather events. Oscar winners, crypto founder legal outcomes. Seriously, if something can happen, there's probably a market for it. But here's what matters, every market has a resolution source. That's the authority that determines the final outcome. Could be a specific news outlet, a government report, a blockchain oracle. The platform doesn't decide who wins, the data does. That's what makes it trustworthy. Now let's address the elephant in the room. Isn't this just gambling? Sports betting with a different coat of paint? The short answer is no. The mechanics are fundamentally different in ways that matter. First, who sets the odds? In sports betting, the sportsbook sets the odds. They build in a margin, the vig, the juice, so no matter what happens, they make money. You're betting against the house. In a prediction market, the house isn't on the other side of your trade. The price is determined by the crowd, every buy and sell moves it. You're trading against other participants. Peer-to-peer. No built-in house edge. Second, what you're trading. Sports betting trades odds, which are the house's estimate of probability with a margin baked in. Prediction markets trade pure probabilities. The price is literally what the crowd thinks the likelihood is. No margin, no markup. The price you see is the price the market believes. Third, the scope of events. Sports betting is sports, football, basketball, horse racing. It's a vertical. Prediction markets are horizontal, they cover everything. Politics, economics, crypto, culture, technology. It's a completely different universe of trading opportunities. Fourth, the time horizon. A football game ends in a few hours. A prediction market can run for days, weeks, months, even years. You're not betting on a single event and done. You can hold a position for months. You can trade in and out. It's more like trading a stock than placing a bet. And fifth, the use case. Prediction markets aren't just for speculation. Hedge funds use them to hedge macro risk. Corporations use them to forecast internal projects. Political campaigns use them to understand voter sentiment. It's a financial instrument, not a slot machine. So why are prediction markets blowing up right now? There are a few reasons. First, regulatory clarity. In the US, platforms like Kalshi have won major legal battles. Prediction markets are being treated as financial instruments, not gambling. That opens the door for institutional money. Second, volume is exploding. Polymarket did $44 billion in 2025. Projections for 2030 are over $2 trillion. That's not speculation, that's a trend. People are waking up to the value of crowdsourced probability. Third, mainstream adoption. Polymarket and Kaido AI just launched attention markets. You can now bet on social metrics, like whether a tweet will get 10 million views. This is blending prediction markets with social media. It's becoming part of the culture. And fourth, the technology. Platforms are getting better. Cleaner interfaces, mobile apps, lower fees. It's becoming accessible to regular people. You don't need to be a hedge fund manager to trade a prediction market. Anyone can do it. So let's summarize. Prediction markets are platforms where you trade on the outcome of future events. The price of a yes share is the crowd's estimate of probability. Events come from everywhere: politics, crypto, macro, corporate, culture. They're fundamentally different from sports betting because the crowd sets the price, there's no house edge, and the scope is infinitely broader. And they're growing fast: regulatory clarity, massive volume, mainstream adoption, better technology. If you want to see what this actually looks like in practice, the platform I've been using is called daytobet. I'll leave a link in the description. They've got a demo balance so you can test everything I just talked about without putting real money on the line. It's how I learned. It's risk-free, and you get to see how the mechanics work in real time. That's it for this one. If you learned something, hit the like button. It helps the algorithm show this to more people. Subscribe if you want more breakdowns like this. And drop a comment. Have you ever traded a prediction market before? Or is this the first time you're hearing about them? Let me know. I'll catch you in the next one. Peace.